trading bell, my heart starts to pound.
My heart starts to pound.
Trading podcast in my
ears.
ears, guiding me through my hopes and fears. Tune in daily, don't miss a single
Thumbs
show.
up.
Sign up for the
All
newsletter, let us
links.
help you grow. Taking risks, making moves, seeking success.
Oh my,
Together
I'm
we'll
just
conquer, no
gonna
room for any less. Every morning I
Alert.
wake up to the sound of the trading bell.
message.
My heart starts to pound. Daily stock
Stop
pick
it,
trading
trading
podcast
podcast
in my ears, guiding me through my hopes and fears. Tune in daily, don't
2%
miss a
means you
single
gotta
show.
charge this
Sign up for
mofo.
the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My
Shouldn't be
heart
on
starts
low,
to pound. Daily stock pick trading
It's the new options game, Chris. You got me FOMO. Chris has got me going FOMO since he went into options. Summer camp overdrive. Let me make sure I got everything okay. Hopes and fears.
Tune in daily, don't miss a single show. Sign up for the newsletter, let
See
us help
less.
you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now.
Good morning. Okay. We're going to go over a lot today. QuantumScape is just, I mean, $5.62 and it's going crazy. Markets are in a good place. I mean, God, the only people who can complain about the markets are the people that went to Coldplay. We're going to go over that story. If you haven't heard about this story, get off of this YouTube right now. You can keep this on in the background, but go Google Coldplay. I forget the name of the company. Coldplay Kiss Cam. Just Google it. Just Google it. I mean, it is the most disgusting display of everybody involved with this is just, creepy as fuck. I mean, everybody's cheating on their, whatever. I'm not a big fan of cheaters. They're just bad people. Ugh. Yeah, Hood is killing it. I mean, let's do some scans here because I probably shouldn't scan. You know what? I'm not going to scan on a Friday because I want you to set yourself up for success long term. And you shouldn't be scanning and trading on Friday. I mean, if you want to do short-term trade, that's fine. But that's not a scan in a 4 hour. That's a scan on a 1 hour. That's hey, let's just look at this. So I'm going to go over Apple. I mean, honest to God, people are asking me about Apple. People are asking me, about Microsoft because it's at all-time highs. I got thoughts about it, and this was a great analysis of it. Poly Market is in Trendspider. And I read this article. Let me see, settings. I want dark mode. Can I get dark mode or something? I guess not. I don't know. I mean, I hate when the brightness comes on there. But this was a great one. This guy took $286 and turned it into $1 million on Polymarket. And he did it just kind of, common sense. This is the top quant stock, small cap. We'll take a look at it. I thought it was interesting. I still don't know anything about it, but we'll take a look. Sarepta is what we thought it was. It's killing people now. Shy gives you a good look. We're going to talk about QuantumScape because QuantumScape is just flying for a couple of different reasons. Archer Aviation is what it should be, and it should be a good one. We will talk about Uber and Lucid because Lucid was up like 50% yesterday, and what analysts are thinking about it. Based on that partnership. We will talk about an elevator pitch on a company that I think is really going to take off. I like this one, Quanta Services. I like the elevator pitch. I liked what it looks like. We're going to take a look at it. I'm going to kind of go over it because it's definitely getting added to a watch list. Monster Beverage. Had you put a $10,000 investment 30 years ago, and 30 years is a long effing time, but you would have thought that a tech company over 30 years would be the best. No, it's Monster Beverage, and $10,000 turned into $48 million over 30 years. Great investment. American Express killed it. This was the dumb moment. I mean, it's only up 0.84%. It's definitely topping out. But everything we saw was luxury customers. And remember, luxury is what American Express is. If you have an American Express, you are probably in the upper echelon of society. Interactive Brokers killed it. Killed it. I missed it wasn't, the clear one wasn't Hood. It's Webull. I mean, honest to God, it's effing Webull. This was a great Netflix, killed it. And this particular article outlines exactly the ad tech names that you want because their ad division is actually growing. So what do they use? They use Magnite. Key takeaways from the earnings call. I mean, it was just a great earnings. Two of the biggest movers I brought up yesterday, Interactive Brokers and Norfolk Southern. As one's popping just based on a Seeking Alpha article. I mean, I'm not doing anything that anybody else shouldn't be doing, which is your research, finding opportunities. That's what you want to do in the market. And we'll talk about this one. I mean, it's just, they're open to work. And then the douchebag, I mean, then he tries to blame Coldplay. What an asshole. I mean, just what an ass. And I'm putting that into, remember, good companies with good products, with good profits and good management. That is an example of just really, really bad management. The entire effing company knew. So American Express cards, they are considered the luxury card. It's a higher income levels, Nathan. And they probably have identified you through some algorithm that you will be. I mean, if you trade stocks and you do the investments, American Express wants you. So, I don't know about your personal financial situation, but I do know. Yeah. Why is my guy Ted popping in? You know what, Nathan? Here's the thing, and I will tell you, and my girlfriend and my family will tell you, I feel poor. I am not poor, but I feel poor. And when you travel around the world, and it's funny because whenever I go on a trip, outside the U.S., God, I realize how much I actually have. And I think anybody in this country would realize how much they have. So, yeah, and that's it. I mean, that's it, Nathan. The greatest thing with credit cards, they just want you, because remember, it's not just like I pay off all my credit cards. I have had zero interest expense on my credit cards. Never. I don't think I've ever paid interest on a credit card. I've always lived within my means. And so it's not just the interest on the credit card that they want. I think American Express charges vendors 3.5%, somewhere in that neighborhood. Visa and MasterCard, it's like just about 3%. So you get it on the front end and the back end, and it's just about, that percentage. So they want you to have the card in your hand. If you have money to spend, they don't necessarily care about the interest. They like the interest because a lot of people live outside their means. So they want the interest. American Express isn't sending a credit card to somebody, like they're not going after students. If the students have, some type of demographic profile where they think they will turn into that, yeah. Yeah, American Express is kind of a big deal. By the way, hit the thumbs up button. There's 24 people in here, 11. And I don't say that enough, but I think that, Spotify has enough 5-star reviews. I'm still 4.7. I mean, there are still people on Spotify who rate me a 0. I don't understand it, but let's see. Your library, and where is my podcast? There it is. 906 people, and I'm still 4.7. Well, and the benefits, again, if you travel a lot, like I've got a bunch of friends who have the Delta American Express card, and they want that one. We'll renew that. We'll renew that one. They want that one because they travel a lot and they want the free tickets. And it makes sense for them. Me, I don't have an American Express card. They continually send me mail and email and stuff that they want me. I'd show you the card, but it's in the other room. I probably shouldn't show the card because it has a number on it. But I have a Fidelity Visa. That is my main card. I have a Chase Amazon card. My parents are actually the Prime members. I am the one of the people on there. So I have a Chase because I get 3%. In the Fidelity card, I think I get 2.5% put into my brokerage. It's the best one that you can get. I mean, again, if you want no hassles, no issues, no nothing, just get the Fidelity card if you have a Fidelity account because it's 2.5%. It's one of the best ones that you can get. And it's just put back into your brokerage account. And at no time do I ever see it. Do I ever look at it? Do I ever worry about it? No. And I have a Chase business card because the podcast, I think I've gone over this one. The podcast has become a pretty good moneymaker. I mean, it's well into the 6 figures at this point where I make it. I don't know what I can probably tell you. I don't mind telling people. This isn't a brag. This is simply a, so you guys understand, I'm supported by you. Through June, I've made $72,000 this year. So, and by the way, one of the things, this is exclusive for the YouTube kind of live audience. It may happen. And don't be upset if this does happen, but I am getting FOMO in this market, and I'm waiting for a pullback. If we do see a pullback over the next 3-4 weeks, somewhere in that neighborhood, the podcast may turn to 3 days a week and then live on Substack, where I'm not going to do any entertainment. I'm not going to talk to the audience much. I am literally going to sit there like I did last night, here, live with Daily Stock Pick. It was just the earnings and stuff. You may just get this kind of video. And I'm not going to talk about stuff. But it will be live trading because I make more money trading than I do the podcast. So it might turn into 3 days a week. on the podcast, and then kind of 2 days a week live. I don't know yet. I mean, I like doing the podcast, but it is getting annoying that, there's so much money to be made, and trading wise, I could be making a lot. So, and I want that house in Florida. Actually, I've changed my mind on the house in Florida. I'm not looking at it. Robinhood is a 3% cash back. I think it goes right into your brokerage. But if I'm not mistaken, let me look. I think Robinhood is 3% if you have a certain amount in their bank. Let me see. Earn 60 days of boosted. Let me see. I don't even know the fucking 4.5% with gold. Do you need gold to have put your money to work? I mean, good God, this Robinhood app, I can't figure out where to go. Let's see. Credit card. No, see, it's not even pulling up. Learn about Bitcoin. I mean, I can't find it. What is this? Whoa. Oh, wow. Robinhood is posting Seeking Alpha articles. I can't figure out, get 4 point. All they want me to do is open up brokerage cash. All they want me to do is open up, All they want me to do is open up a gold. So I think you need gold. I think. Yeah. Dude, Hood is one. Yeah. I mean, Chris Camillo has, that dude has done it right. Hood is doing well. Let me go into the podcast now. Yeah, I mean, literally, I'll show you my account. I mean, all I see is, yeah, I'm all caught up. I mean, there's my account. I put $500 in there, and it's now 561. By the way, full disclosure, it is only up. It's up 12% year to date. I don't trade in there. I don't do anything. I literally put all of the money into VOO. That's it. And it's up 12%. I mean, it's at 561 now. I'm perfectly happy. But all that happens is, I get this worth the weight in gold. So I have to, and that's one of the tabs. But if you have gold, you're probably getting pitched. Yeah. If you've got gold, you're probably getting pitched the credit card. So that's why they want me to upgrade to gold. That's the big money maker. They don't want the credit card unless you're paying for gold. Like if you sign up for Fidelity, they're not asking you to pay for anything, but they want the credit card. So, and it's getting 2.5%. Hold on. Let me just Google. Fidelity Visa card cash back. Dude, there it is, 2%. So it's 2%. 2% unlimited cash back, $100 for the global entry, no annual fees, auto rental coverage, zero fraud liability. So, I'm not affiliated with Fidelity. If you want to get a Fidelity account, let me know because, my guy does give me a bonus every now and then. I mean, Fidelity should give me. He's great, and this is why I don't have a link for Fidelity. Is because specifically I think you should go with Stuart who is my financial analyst. And if you have enough money, he talks to you. If you don't have enough money, he gets his team to talk to you, and he oversees his team. So he's great. I mean, he is phenomenal. Okay. Let's go. Okay. I'm gonna start recording now, so I'm going to politely ignore you. But if you're just here, hit the thumbs up button. There's 25 people in here, 18 thumbs up. Just hit it. Come on, doesn't cost you anything. Helps me out. Good morning. It is Friday, July 18th. I've got a lot to go over today. We're gonna go over Microsoft because it's at all-time highs. Should you be buying? We will go over Apple. We will go over a stock that if you bought it 30 years ago with $10,000, you got like $48 million now. 30 years. Again, buy and hold kind of thing. Top stock moves, and a small cap stock, which just moved to the top of Seeking Alpha's quant. We'll go over all of that. But where's the markets? Do we care? Because here's the thing. I always talk about buy a good company with good profits, with good products, and good management. And if you haven't seen, go and Google Coldplay with the Kiss Cam. These two assholes were cheating. That's the CEO and the Vice President of Human Resources in a box cheating, and the Kiss Cam went on them. And these two assholes tried to hide, and then the lead singer of Coldplay says, ooh, they must be having an affair. And the internet went and did its work. And then this douchebag CEO, this is why you're a bad management. He wrote a letter blaming Coldplay. Douchebag. And the company knew about it because everybody that was in that box was from the company. So if you're one of these people, stop listening. Don't even listen to me. I don't like you. And yes, I don't know their situation, but it's just horrible. They both have spouses. They both have kids. It's a horrible situation. But you know what's not horrible? The market. We notched all-time highs. I think it's like the 15th all-time high on the Qs or something this year that we've closed at. Again, record closes and retail sales and earnings fuel the rally. Strong June retail sales show consumers may have been spooked by tariffs, but they haven't gone into hiding. The fact that June is a slower month and that good outlays comprise a fraction of overall outlays means that we are not completely rethinking our forecast for a second half for consumer spending. That's the Wells Fargo analyst said. The VIX is easing. I mean, we can go look at the VIX. The VIX right now, 16. Like I said, it's going to take a lot to get to 14. It doesn't take much to get to 20 here. But it's slightly easing, despite the back and forth headlines concerning the possibility of sacking Federal Chair Powell and President Trump's trade wars. Market participants ultimately didn't panic, leaving implied volatility apparently well anchored. The muted reaction to yesterday's events, meaning Wednesday's, suggests that traders remain focused on the earnings and macro data rather than political theater. Again, it's about not overreacting, and the market has learned Trump is going to say stuff. Again, there was a comment yesterday about Trump being the worst, and I said, hey, he's done some good things. Let me list a couple of good things that Trump has done. And again, I am not a Trump fan. And FYI, he is absolutely in those Epstein files. He is absolutely somebody who wrote a Christmas card or a card to Jeffrey Epstein. Absolutely, just like Jamie Dimon knew exactly who Epstein was when he took his money. But Trump took on China when nobody else would in his first term. Trump appointed Jerome Powell, who he now hates, but he's the guy who got him into the job. Trump also, with the big, beautiful bill, while I don't love it, it gave $1,000 to every newborn invested in the S&P. That I love. I love the crypto stuff that he's done. And I can go on and on. There are some good things that he's done. The bad shit that he's done, again, the tariff policy, it's a fucking chaos. It's just a nightmare. If he had just done 10% tariffs across the board, we wouldn't have had the crash. But it gave you a great opportunity. So watch the VIX. The 10-year is telling you, hey, we're not sure that this is a good thing. The 10-year bond, if you just go over 1 month, look, it's rising. That's not a good thing. And it's not because Jerome Powell hasn't reduced rates. It's because of uncertainty. The bond market will always win. So while Trump is out there yelling that Powell should reduce rates and he should be fired, A, he's not going to fire him. And B, even if Powell reduced the rates, the markets may say, you know what? We're still unsure of tariffs. We're still unsure if the US dollar is going to strengthen or not. We're still unsure of these things. The market has its own mind. So I am not a Trump fan. He has done some good things, but he just does it with chaos. And the fact that he hates half of this country because of political views, and make no mistake, he hates half this country. That is not somebody I should say that I want as a leader. Even if you lie to me and tell me that you care about me when you don't, just lie. That's what politics is. So, but understand the market is a good market and we are in a bull market, and that will go on through this podcast. Because two of the biggest movers yesterday, Interactive Brokers this morning is up 5%. I called that one. I said, I don't think that, we're going to have to wait, and you should trade it. When you go and look at Interactive Brokers, IBKR is the symbol. I have a little dyslexia there. But IBKR, look at a 5-minute chart after hours, and you can see I said, hey, trade this one if you want. Where I was wrong was I had said, hey, I think Hood is going to be one of the bigger ones if Interactive Brokers wins, and it was. But what I didn't see was this, Webull. And we'll go over this one in a little bit because we're going to go over Interactive Brokers. But look at Webull. Look at Webull in the 4-hour algorithm, okay? Webull in the 4-hour algorithm. Again, it's a SPAC. So we're going to have to pull this one up because it's mainly there. But look, the 4-hour algorithm got you in at $11 and you're still in it at 14. Okay, but those are the biggest movers. Biggest loser, Netflix. And then we'll go over SRPT too, because that is what it is. But Netflix, why is Netflix down when they had such a good quarter? I mean, Netflix, it was such a good quarter. The key takeaways, cash flow was great. The margins were great. The subscribers was great. Viewing metrics, great. Everything was great. What wasn't great was the run into this. They're up 42% year to date. Okay, the 4-hour algorithm got you in at 930. It got you out at about 1260, somewhere in that neighborhood. We're trading at 1242. I had said, I was on live with Trendspider yesterday, and I said, if this pulls back to 1,000, which is about a 20% move, 25% move, I'm buying it. But I want to let it shake out. I don't think we're getting back down there, but if I see 5 to 10% losses on this one, I'm going to start adding to my position again. But I'm going to do it with the 4-hour algorithm. And that's the plan. It's bound to pull back. When you're up 42%, it was a great quarter. It wasn't a legendary quarter. So if you want to read about it, you absolutely can. Now this one, I don't want you to forget about. One of the strongest points was the advertising tier. And this particular article, I will post it. The ad tech name's tied to connected TV. The trading desk. We've gone over the trading desk before, that I think it's going to fill this gap up to 119. And the 4-hour algorithm got you in at 71. Where are you trading right now? $80.90. Pretty good. Pretty good. But the one that is absolutely tied into Netflix is Magnite. And I don't know if I've brought this one up, but I will. and it should be on our watch list. It is. It's on the daily stock pick watch list. So you had the opportunity to scan for it, and if you got in at $10, great, because you're at $24 right now. The 4-hour algorithm makes you 167% versus 77% buy and hold. Again, this is one of the stocks, one of the companies, and go and ask AI how it's worked into Netflix. Again, don't ask me. Don't ask anybody else. You've got the smartest tools out there at your disposal, and you don't have to pay for them. Just go and ask. So again, Netflix killed it. Interactive Broker, they beat on higher trading volumes. That was what it was. And look, it's a strong buy in the quant. Where did it turn to a strong buy? 59.63. Where is it trading? In pre-market, 62. So how would I look at Interactive Brokers? IBKR is the symbol. And I went over this yesterday. Very simply, hey, the 4-hour algorithm makes you almost as much as buy and hold. It wins 48% of the time in 21 positions over 24 months. And you can see, where's the all-time high? Right there at about 60. Got to 60. Okay. If you can hold 60 past this earnings, that turns into support. It was resistance because it pulled back from there. And it pulled back and it sat here at 52. Again, their earnings were good last time in April. If you bought at $40 like the 4-hour algorithm said, great, got you out with 24%. Then it just fluttered around, but it got you in at 52. So again, it depends on your strategy, but they killed it. Now, I had said that Hood was going to be probably something in sympathy with Interactive Brokers, and it was. You know, Interactive Brokers is up 5%, Hood is up 3%. I said, this is a $120 stock. By the time they get to earnings, I think it's a $120 stock. And then I think they do a killer earnings like Interactive Brokers just did. And you can trade this on the 4-hour algorithm. Again, 870% versus 853 if you just bought and held it. Buying and holding it is fine. You win 50% of the time. So just buy it when it dips and the 4-hour algorithm tells you to. Again, this is part of just the process. It's part of what I do. Now, am I in this one? No, I have missed it. This is one that's not even in an ETF that I own. I have completely missed this one. But I am a believer and I like it. Now, I don't own this other one, but this one also is going to go up in sympathy. It's Webull. It's not covered by the quant, so you have to do your research. But Webull stock, after the online investment platform said it will integrate Webull Pay back into the Webull Group amid plans to reintroduce crypto trading to global customers. This is a SPAC, so it's not legit. For me, I don't like a stock that is a SPAC until we have significant earnings insights, and we haven't yet. Okay, their earnings are coming up later in August. But whatever Robinhood and Interactive Brokers does, Webull does. Does it create an equal company? No. But is this stock run yet? No. You have to do your research. Again, go and look at the financials. Okay? They're making money. Go and look at the valuation. They're not turning profits yet. Go and look at the growth. 11% growth year over year. Look at the profitability, 79% gross profit margin. And let's just do a look. Let's just look at it. We're going to look at Interactive Brokers, and we're going to do this. We're going to pull up this IBKR. If you have Seeking Alpha, you can do this stuff. I mean, this is what Seeking Alpha and stuff is great at. Let's look at it. Employees, Webull's smaller. It's the smallest of them all. Wall Street analysts, nobody covers Webull. There's a ton that cover Robinhood. But let's go and look at some of the returns. You can look at it, 39%. Hood is 40%. So it's similar. 3 months down 45%, 49%. All the others are up. But let's look at the valuation again. Bull doesn't have a PE because they're not making money. But Hood is incredibly expensive. Interactive Brokers, not as expensive. But they also don't have the growth that Robinhood does. Again, Webull has 11% growth, so it's not created equal. The gross profit margin, Robinhood is 90%. Interactive Brokers is 90%, but their growth isn't as much as Robinhood. So again, just look at the equal things and then decide which one you want to invest in. I'm picking Hood as my winner. I just want to get into this, and I haven't had the chance. But it's clear if I use the 4-hour algorithm and I just, buy when it tells me to, I should be fine. Not going to worry about valuation. I'm not going to worry about it. Now, American Express, this should have been the dumb moment of all, okay? Now it's down in pre-market, and I'll explain why. But they killed it on earnings with healthy credit spending. Everybody should have known this. We heard from Delta that luxury consumers were buying up their plane tickets. We heard that from United as well. We hear that from retailers. Okay, they're still spending big. And remember, American Express is the luxury credit card. Visa and MasterCard do have lower annual spending, and just consumers are a lower level. But American Express is kind of the premier. It's the gold standard. It is expensive. Now the quant has it as a hold. Wall Street has its average price target at 318. Where are you trading right now? 314. So it's right up there. And I will show you why it's having some problems getting over this. Well, look at the all-time high right here. 324. Is it all-time or 50? It's all-time. So again, this is going to have some resistance without some type of confirmation that, hey, this is going to go on forever and we're going to do it, because again, it's expensive. The valuation 20 times forward earnings when the sector's trading at 11, but they are the leader. Is it worth buying into? For me, I'd rather wait for a pullback. Now, the 4-hour algorithm makes you 48%, but buying and holding makes you 83% on this. So I'm not, again, credit cards aren't my thing. We'll talk about this with biopharma. Credit cards aren't my thing. It's not something that I'm investing in. But this should have been the dumb moment. The 4-hour algorithm got you out right before it. So do I expect this to pull back? Probably. But I'm not looking to get into this one. Now, one that was brought up yesterday that I find, Steph brought this up while I was wrapping things up live on YouTube. I go live on YouTube at 8:30 in the morning, and I record this live. Right now, it's 9:16. And so I just, goof around and shoot the shit with the fans. But again, she brought up Kohl's. And this is interesting, okay? Now, it's a hold in the quant. I think they're at risk of cutting their dividend. Who cares? You don't invest in this one for the dividend. Because if you do, you're just not thinking clearly. Because a retailer that's paying 5.19%, how much freaking margin do they have to pay 5.19% on a again, if you're shopping at Kohl's, it might make sense. I like Kohl's. I've been to Kohl's a couple of times. I like it. It's not a great store. It's a good store. When I need underwear, when I need socks, when I need pillowcases, when I need a comforter, I'll go there and see what they have. But this is the key, okay? And this is what's interesting. I pull up this Analyze with AI yesterday, and I was like, well, let me look at some of the positives of this thing, okay? And the first positive in this analyst report, and this is for every stock that the quant covers, you get this with Seeking Alpha. Kohl's is trading at a record discount to tangible book value, with deep value metrics and substantial free cash flow yield, presenting a unique buying opportunity. Now, the problem with that kind of analysis is that there's a lot of debt here. So there is risk. But then you look at this short interest of 47%. Any move up in this or any good news that comes out of this company, that shit's gonna fly. That is what's called a short squeeze. You will have people just begging to buy this stock to cover their short. Now, it doesn't mean you go into this. And how do you find the book value of Kohl's? Well, I don't even use Seeking Alpha. They have it in there. But I'll go over here to FinViz, and down here, book value per share. The stock is trading at $9.63, okay? If you just sold this off for the parts, the book value is $33.74. I mean, that's an interesting play. Again, thought process, identify it. You may not know all this stuff, but go and ask AI. Say, I'm 15 years old. This is the prompt you use. I'm 15 years old. I know nothing about stocks. Somebody told me that Kohl's could shoot up. Can you act like you're a 35-year-old Wall Street analyst and tell me why it might increase in price and what are the risks? Just go and ask it. Have a conversation with AI. That's how you do this. So Steph, kudos to you. She's in on this one, and it's had a good stock move. And we can look at it in the 4-hour algorithm. Now, this is a upper left to bottom right stock. It's not going to make you money. You have to find a strategy that actually makes you money. Well, the last time you got in, Kohl's, May 13th, made you 11%. Today, it has you in at 856. You're trading at 963. Okay, but a bottom left or upper left to bottom right stock, long term, unless you're shorting this, you're not making money. Unless you're finding some shorter time frame. Okay? Now, I'm a large cap tech investor. That's typically where I've made my money. I've had NVIDIA. I've had Amazon. Okay? This is the last 30 years. The best stock investment in the last 30 years. 30 years. If you put $10,000 into this top one, you'd have $48 million today. Okay? 30 years ago, if you put $10,000 into NVIDIA, you'd have $44 million. So it's not far behind. $10,000 into Amazon 30 years ago, you'd have $29 million. Again, 2 AI companies and 1 beverage company. It's Monster Beverage. Do you want, again, if you have the cojones to sit there and live through downturns, they can turn into big ones. 30 years ago, 30 years ago, it was 1995. I didn't put $10,000 into Apple until 2000 or so. I still got plenty of money in Apple. You know, I haven't sold a ton of it. So you can estimate my net worth in Apple. But yeah, best stocks to trade. So understand, you need to have an elevator pitch. You need to understand the stocks that you're investing in. You need to know, okay, this is big. I am a large cap tech investor. Would I invest in Monster Beverage? Hell no. I don't drink that crap. But I do love tech. I love NVIDIA, love Amazon, love Netflix, love Apple. Ross stores? Nah. So I saw an elevator pitch yesterday. And again, you can listen to CNBC, you can listen to Bloomberg, you can listen to the internet spaces, whatever. You hear an elevator pitch and they say, oh my God, this stock is great. What do? Well, you go and research it. Okay, PWR. This one is going to be the bridge for the electrical grid going from renewables to traditional energy. And again, it's an industrial. It's not in my wheelhouse. But I know to power AI, you need electricity. And so this is in that realm. And I like it. And so you go down and you read the offers infrastructure solutions for electric and gas utility, renewable energy, communications pipeline, and energy industries in the United States, Canada, Australia, and internationally. Okay, its market cap, $58 billion, meets my criteria. Short interest, 3.91, not a ton. And it's a good company. Again, the quant says it's a hold. Why? We can go and look at it, but it's been a hold forever. And part of the reason you can clearly see it, it's the valuation. You're paying 38 times forward earnings, but every other metric, the growth, the profitability, momentum, and revisions are good. So let's go analyze it with AI. And we'll look at the specific metrics. Valuation appears spreads, significantly overpricing across key metrics. For instance, its EV/EBITDA is 44, substantially higher than the sector median of 18, reflecting an expensive stock. But go and look at revisions. Recent trends in earnings estimates are promising, with 23 upwards earnings per share revisions in the past 3 months compared to only 1 downward. This suggests analysts are optimistic about the future potential of earnings. And you go and look at the growth, 15% year over year revenue growth when the rest of the industry is at 3%. And so if that's not enough analysis for you, there are great seeking alpha analysts that will do it for you. And again, this guy, price of publication 386, we can go look at what he's up 3% on this one. It's positioned for strong growth driven by rising US power demand for data centers. Again, this is a data center play. So let's use our tools and let's see, could we get into this one? Well, look at this weekly chart. Okay, that is a strong stock. It is overstretched. Do I want to buy into it now or wait? Well, if my long-term thesis is that this is going to continue to grow, then maybe I just want to buy it. It's expensive. But as we've seen with Palantir, as we've seen with Robinhood, sometimes the growth outpaces the actual valuation. The 4-hour algorithm had you in here at 273%, 273. You're trading at 397 right now. So how much is that? Boy, I wish I had bought this in April, because that's 47%. Covered the gap. Again, we went over trading desk. Our trading desk has a gap. This one covered the gap. It's got gaps below it. It's 200 days starting to move positive. You had that golden cross right here. This would have been an absolute, if I was watching this one and I knew it was an AI and I had a big one, that golden cross, while the 4-hour algorithm has me in, would have been the trigger. And where would I have bought? 343. So that is going to be where I want to enter. Maybe a retracement back to the top of this gap at 355. I'm just not comfortable buying it. And if I don't get the chance, then I'm not going to miss out. But that's how I look at things. That's how I do stuff. And one that I have written off that maybe we shouldn't write off. Let's look at it. Lucid. Lucid was up almost 50% yesterday. It pulled back to close 36% up because of a partnership with Uber. Autonomous vehicles have enormous potential to transform our cities. We're thrilled to partner with Nuro and Lucid on a new robo-taxi program, purpose-built just for the Uber platform. So Lucid is going to build, I've said this before, this is a company that's going bankrupt without additional investment. Cars are expensive. Extremely expensive. Year to date, this is finally up 3%, but that's only because it was up 36% yesterday. Let's look at Lucid here. Does this make sense? For me, I'm not even putting this on a watch list. I don't think I have this on a watch list. No, I don't like the company. The valuation is a B-, but they're not making money and cars are expensive. Their profitability, they lose 105% gross profit margin. So they lose on every car they put out there. If I'm going to invest in something, I'm going to invest in Rivian, which is actually close to becoming even. They are still losing like $30,000 on every car they make. But I like the story of Rivian more than I like Lucid. But I still am big on Uber. I think it's a $100 stock. What do analysts say about Uber and Lucid's big autonomous deal? I mean, I just don't see Lucid. Again, it's down 2.5%. I could be completely wrong. But again, you have to have these theses. And so Archer Aviation, I've brought up this up before. This is the tie-in with Anduril, which is Palmer Luckey's defense stock. They weighed in on their recent acquisition of a company. They acquired a specialized high-performance composite manufacturing facility tailored for defense applications. If Palmer Luckey wants to get into actually creating some of these vehicles, he may go to Archer and he may say, hey, let's partner up. That will be a boost for this stock. So while it's at $13.40, I don't want to invest there. I want to wait for a pullback. This has plenty of pullbacks. But I like the stock, so it's on my watch list. One that wasn't on my watch list, but it is now. I think it's actually been in the Trendspider watch list, but I didn't see it. QuantumScape. They surged for 7 consecutive sessions, adding 150% over a month. And you can read why. But I don't like to read. I just like to look at the chart of this one because it's a company that's not necessarily making money, but they make solid state batteries. And this is huge with EVs, with power, with generation, with all of that stuff. If they can come up with breakthroughs. And again, $5.62 is where the 4-hour algorithm had you, but it loses you 38%. It only wins 28% of the time. I wouldn't even have been looking at this one. But then I read from Shy yesterday. 2 stocks set to benefit from the U.S. tariffs on Chinese battery materials. QuantumScape. Solid state has always been the post-lithium pitch. If lithium gets more expensive, suddenly the status quo looks worse. That pulls their timeline forward without them having to change a thing. That's it. That's the pitch. And so QuantumScape, I have it in my non-owned watch list, but I'm going to put it into the daily stock pick watch list so I can scan against it because I think that 38%, if we look at a long-term chart of this, I think this one's starting to turn around. So now you can scan on it if you want to scan the watch list. So I think it has more room to go just based on Shy's pitch there. Am I investing in it? No. I'm going to wait and see what it does. But I'm going to wait and see and backtest it a little bit just to make sure that it works. Now, I just want to show you. This is why I don't like the biopharma space. Sarepta. This was up 30% yesterday. Okay? 30%. It's crashing today because someone died. News catalysts like this are just not worth my risk reward. Again, when I see the QuantumScape chart, I get FOMO. But I'm going to do my own research and look at it. Sarepta, this isn't even in my realm of expertise. This is biopharma. So when people ask me about biopharma, I say, it's not in my expertise. I don't know anything about this. Gene therapy, I have no idea what this means. So again, I'm not getting into that space. So when you ask me about a stock and it's not a large cap tech stock and it's not a stock that I own, typically I could care less. You need to make your own decisions and do your own research. That's why the internet is there. And Seeking Alpha, I was just cruising around on Seeking Alpha yesterday and found this one. This is the top small cap stock in the Seeking Alpha Quant. It's a strong buy. Let's take a look at it because it went from a strong buy at $29. It's at $45. That was just a couple of months ago on May 16th. Okay. Have things changed on this? Well, we'll take a look. Look at it. It's close to its 52-week high. Short interest, 2.93. It's got a $4 billion market cap. It does kind of fit my stuff because it's information technology and electronic manufacturing services. So let me see if it actually makes money. It's got a PE, 21 times forward earnings, below the sector. Its profitability is horrible. 20% gross profit margin means they don't have pricing power, so I'm not fully interested in it. But Let's take a look at the AI stuff. And I immediately, when I pull up this AI, when I don't know it, I don't even look. I look at the competitors. Do I know any of them? No. I scroll past the sector metrics because I can just look at the grade and know kind of what it is. And I look at the positives and negatives. Okay? Positives, strategic focus on aerospace and defense. Yes, interested. Company's Q1 2025 results showcase strong execution. Fantastic. Expanding its global footprint with promising developments in Malaysia and New York. Love it. Concerns? Challenges with cost control. Again, we saw that with the gross margin. The company's return on invested capital and equity have averaged below its cost of capital. Again, they're spending money to try and make money, but they're not doing it effectively. Despite a strategic pivot to high-value markets, TTM's financial performance remains volatile. Again, volatility. That would tell me that I may want to trade this. So let me go and look at the chart. Because if I want to trade this, I'd be doing pretty freaking well. Because the 4-hour algorithm makes you 273% over the last 2 years versus 251%. I'd be happy buying and holding at 251% over 2 years. Now, the 4-hour algorithm got you in here at $19. You are currently over 99 days, up 157%. So absolutely, I want to put this into the watch list. So anybody subscribe to Trendspider, you just got an update to the watch list. That's how I do it. Now, I also want to tell you, Trendspider, we know, I talked about it yesterday, has Polymarket in. So they have Polymarket odds on the charts now, and you can do this. If you have money in Robinhood, you can bet on Polymarket. This is an interview. Okay, this is an interview with a Polymarket bettor who put $286 in there back into 2024. He just put $286. It's now worth $1 million. So $286, if you're listening to me, $286 is not going to change your life. And you hear that $1 million and you're like, oh, I got to get in on this. That's something I have to get in on. Understand, he deposited in June of 2024. So just in a year, he's turned that into $1 million with a very simple strategy. Reversing stupidity. It's a great article. I have done this with my Webull account. Okay, I am not betting, I am investing. But this is not investing. My Webull account is actively traded. Okay? I have $13,000. I started with $1,000 a few years ago. It's now $13,000. Am I comfortable going into Polymarket? No. Am I going to take like $500 and throw it in there? Maybe. But I won't add money to it. Once I lose it, I'm out. It's not going to change my life. That's the difference between gambling and investing. Okay, Polymarket is 100% gambling. But if you can find something that makes you money, again, reversing stupidity. Just don't get caught in the trap of, oh, I just lost my entire thing. I'm going to refund it with more money and double down. That's where you get in trouble. Okay, I've got no rules on my Webull portfolio. I don't have time frames. I don't have, I won't buy this. I'm going to look at valuation on this. No rules on it. It's grown. And I still own, by the way, TQQQ. And why? Because I took that trade a few weeks ago and I want to let it play out in the 4-hour algorithm. Why? Because the 4-hour algorithm beats buy and hold on this one. And it wins 42% of the time. You can see right now in this one, let's see, we're up 12. 87, yeah, 12%. So again, having a strategy, and I'm not going to say Polymarket is ridiculous and that betting like this is ridiculous. He has proven he can make money. And if you can take $300 and turn it into $1,000 or $5,000, that's a really good return. Don't expect $1 million. But this article goes over everything. Now, I've been getting a lot of questions about Microsoft because Microsoft is at all-time highs and it just continues to go higher. Okay? What am I doing with Microsoft? This is a top 3 position for me. in my portfolio. I went over my portfolio the other day. My friend asked me, how are you doing? I'm down 5% in my portfolio. But you know what? We're going to go over Apple in a little bit. My portfolio is down 5%. Apple is down 16% year to date. You want to know what that tells me? That tells me the rest of my portfolio, alpha picks, the rest of my portfolio with some of the other stocks and ETFs that I have, I am incredibly up, because to have over 50% of my portfolio down 16% and only have the entire portfolio down 5%, that is a win. So what am I doing with Microsoft? Nothing. I'm not trimming. I'm not buying. I've got heavy six figures in Microsoft, okay? It's not $1 million position. It's heavy six figures. And I'm not about to trim when you've got momentum. The momentum is the strongest thing in this market. I've identified it as a long-term buy and hold, and I've held this through many times before. I mean, I think I've held this all the way since like 2010, somewhere in that neighborhood. I've held it. So I've gone through many downturns, but that is not one that I want to trim or get rid of right now. Will the thesis change? Absolutely, it'll change. But for now, I'm watching the chart. This analysis right here, why Microsoft still has room to run. Great products, great profits, great management. I'm okay with that. And analysts just keep raising their target. Okay? Microsoft is still 5% below where Wall Street thinks that it's worth. Wall Street thinks it's worth $537. It's trading at $511 right now. Am I buying more? No. 5% isn't enough upside for me to say I'm going to buy. But it's also not high enough with the momentum. I mean, just take a look at the momentum. 39% 3 months, 19% 6 months, 22% 9 months, 15% 1 year. If you told me I could make 15% in a stock in 1 year, that's as safe as Microsoft, I'm all in. And don't forget about Apple. Okay? Here's my theory on Apple. And people say, why are you still holding Apple? Well, I've got a position in brokerage that is tax affected. So I'd rather not sell it at $210 because I think it's a $260 stock. And here's the catalyst that I see with Apple. And we'll just look at the chart. It is basing with a support level. I did sell some at 200 and it wasn't tax affected. It was in my retirement account. But I did sell some at 200 because I moved it other places. Okay. But the large amount of my Apple position is in my brokerage account, which is tax affected. And so what am I doing with this stock? Nothing. I'm not doing anything. Because the biggest catalyst for Apple right now is if they say anything about AI. Okay, they've got earnings coming up. What, couple weeks? July 31st? I'm doing nothing. And one of the things I want to point out with Apple that I look at constantly is the positives and negatives. The positives, Apple services segment achieves $26.6 billion in revenue. 12% growth year over year. That's not enough to make their revenues grow, but that's impressive because the profit margin on those services is huge. It's strong, high margin cash engine. 2.4 billion devices. Despite lagging in AI, Apple's strategic discussions with Anthropic and OpenAI for Siri enhancements indicates potential upside. They say anything about Siri getting better, it's $240 stock. They actually complete it, it's $260 stock. Apple's robust financials includes a massive $100 billion buyback and increased dividends. That's management confidence providing a compelling entry. Again, they are buying back a ton of stock to support it at $200. Now, they've got concerns. I've got concerns over the high valuation, 30 times forward earnings. That's a concern. Siri, huge concern. I hate Siri. She just turns on when I say it. Yeah, she's yelling at me too. Apple's relying on third-party AI integration, lack of significant recent product innovations. The product category, yeah, it's an issue. But again, I'm just holding. So that gives you a great look at how I'm looking at the stock market now. Again, two of my largest positions, Apple and Microsoft. And I just told you, I want to get into Hood. I want to get into Webull because that one's good. I want to trade some of these other stocks. So again, this podcast is not about, oh my God, you've got to go and get this one. You've got to go and get this one. I did not take a lot of the trades that you guys have made money on, that you guys have sent me messages about. I am super, super happy that you guys have taken these trades. But by the time I get off this podcast, I'm exhausted. And so that's why I want you to get these tools. And again, I went through this entire podcast without promoting this. But Trendspider is on sale. Get it. And if you don't know anything about technicals and it's within your budget, get the advanced tier. It's up to 52 trainings per year. That's once a week for $124 a month. For a month? What's that? 20-something dollars? $26 a month? $26 per training session. Name a professional like service that you can get one-on-one Zoom training for $26 per session. And then you get the tool for free for that year. Again, if you assume that you're just paying for the training, you can get enhanced for 3 training sessions per year. Has a lot more. Or just get the premium for 52. This comes with 2 trainings. So you take one at the beginning, show me how to do it. Then you take one a few months later after you've played with it. And you say, hey, I'm doing this. Am I doing it right? And then if you don't want it, maybe you pay the $70. I think they charge $70 for the hour of training. That's why advanced is so good. And it's on sale. And what have I taken you through? I've taken you through the premium service. I suggest getting both Alpha Picks and Premium. And if you haven't watched yesterday's podcast, go. I brought up the top 3 Alpha Picks and the way I'm trading them, the way I'm adding to my winners. And I've shown you it's up like 700 something %, the top one. So yesterday's podcast had a ton for you. So if you're listening to this one, go and listen to yesterday's. But this bundle saves you the most, and it's the second link on Linktree. And if you don't want Alpha Picks, just go and get Premium. You get $30 off and you get a free 7-day trial. Try it for 7 days. Grab the top 2025 stocks. Grab the second half 2025 stocks. And just try it for 7 days. If you don't like it, get rid of it. But Alpha Picks is the portfolio that I own. Again, I talked about the rest of my portfolio doing well. I've got 6 figures into this portfolio, and it's up 182% while the S&P's up 64%. And the dollar amount that you spend on this portfolio, if you put enough in, you make your money. In fact, I've had 3 or 4 people that say they literally at 9:30 in the morning on the 15th, they sat there, or I'm sorry, 12 o'clock. 12 o'clock it comes out. They refreshed the page and they scalped the Alpha Pick for 10%. And they said, you know what? I had like $5,000 into this. I made $500. Boom. You paid for your subscription. So again, the strategies are out there. The tools are out there. Even if I go to like just a few days a week on this podcast, then you're going to get the tools that you use are the tools that I use. So I don't consider it selling, but just showing you the tools that I use. And that's what I do every day. But I have to remind you that these tools are available to you. So if you have any questions, again, Linktree, I'm wide open. My email address is right there. Or just subscribe to the newsletter and you can put a comment or reply to the email that I send you every day. I was live yesterday, so you can go check out this 15-minute video and kind of go over my thoughts on Netflix and interactive brokers. But if you have any questions, hit me up. Have a great weekend. I'll talk to you later. Bye. Whew, it's hot in here. I have to turn down the air conditioning. Dude, that was a good podcast, I thought. It mixed in everything. Stop eco. I'm going to turn it down to 77. Yes, my thermostat is 77. Bum, 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 bum. Let me put this into iMovie. Is anybody still there? I got a bunch of people here. Hey, Dominic. Thank you. I get preachy sometimes, but I save it for the end. I think it's like 80% of the audience actually makes it to the end, which Spotfiy tells me is crazy. But I think I throw just enough curse words in there that people want to continue watching. I'm not going to flag it for bad language either. They give me the option to flag it for foul language, I think. I forget exactly what it's called. But I don't ever flag it. Because as long as the C word doesn't come out, then I don't consider it bad language. I just consider conversational. When the C word comes out, I will flag it for bad language. But I think I've used that total maybe 5-10 times in my life. And most of the time it's for comedy purposes because it is kind of funny sometimes. Yeah, so my buddy has his thermostat this weekend. It was at, I think they keep it at 65. And I was like, what's your electric bill like? And he's like, I don't know. The wife pays that. My electric bill never goes over like 150. So, thanks, vacation guy. Yeah, Nathan, I mean, that's the thing is, Hood, I think, is just one of those that I'm going to miss. It's going to be another Palantir. And while I wait for the pullback, it's just not coming. Let's see. My Webull account is actually negative based on IBIT being down. Oh, Spotify's down. Spotify's going to be a buy at some point in time. And I hold Spotfiy. It just got in there at 721. This one wins 53% of the time. But you do miss out on some of these. And so while the buy and hold beats it, that's typically where I buy it. And so today is 721. That might be. Well, the other thing you have to understand about my house is I have upgraded insulation. So I do think that my house is warmer than most, but it never feels like hot. It does in the afternoon. I will tell you the thermostat, the reason I turn it down in the morning is because it does have some problems keeping up with the sun in the afternoon. And today's going to be a hot one. Today's high is going to be 89. So it's not going to be as bad as the past few days, but it is going to be bad. And I already, Nathan, sorry to spoil it, but I already did my my thumbnail. So I'm just waiting for this one to actually pull up. You're confused about taking profits. You should know when you should take profits. So I'll give you a great, for instance, Apple. I just went over it. Microsoft, I haven't taken profits on Microsoft. I've held it for years and I haven't taken profits. Apple, I haven't taken profits on it. Amazon, I don't think I've taken profits. I have traded Amazon in lots where I identify those lots as, okay, I'm going to trade it. Google, I have traded that one. Apple, I've sold some, but I haven't bought back in a while just because I feel like I have enough. But I always know, and you know, that's what kind of why I like Alpha Picks, is because I don't have to think about it. It's a rules-based portfolio. So if you want to make rules for your own portfolio, you can, yeah, and Chris is right. He's retired. I'm retired. The risk tolerance when you're retired, and I said, man, Stock Talk, who I'm on Spaces with in the afternoon, that guy goes on a rant almost every day. And he's talking to he doesn't realize he's talking to the same 5 people. But the reality of it is, managing an 8-figure portfolio is far different than managing a 6-figure portfolio. And Dominic, I would disagree with you respectfully about asking Grok, because I don't think that Grok can. If you want to leave it up to AI, I think you could. You know, ask it for a strategy, maybe, you know, that I just don't. With Hood, could you see a 50% pullback? Absolutely. I mean, the valuation of Hood is so outstretched. But they're gonna get things right. And, you know, 60, if this pulls, I mean, remember, if you pull back 50% on the stock price, you go from 112 to say, you know, $60, you're still at 30 times forward earnings. So it's still expensive. But with 59% revenue growth year over year, and again, they're probably going to be up with crypto and stuff. Oh, so WF, you have listened to Stock Talk. Maybe I'd do the same thing. I don't know if you're talking about me or Stock Talk, but Stock Talk is, I don't want to go on a rant today. But yeah, he does it all the time. Let's see, I've only got a couple of minutes left. Yeah, 3 minutes it's going to take. After that, I'm getting off. But yeah, I mean, that's the thing, is they're growing. And the management team is so aggressive at Robinhood. And it's funny because I talked to Shai about doing a podcast with him. I think it would be beneficial. I just think the guy's just too busy, and I'm probably too small of a creator for him. You know, that guy's on freaking TV and stuff. But he just moved all of his stuff from Fidelity to Robinhood. And so they sold him on Robinhood. He is, I don't know if he's a high net worth. I think he's got $1 million. So he's probably, I think you need to be a high net worth person in Fidelity. I think you need like $2 or $3 million. I don't know. Full disclosure, I don't know what they label it. They label me as a high net worth individual. I get special privileges. I have a specific team that kind of handles a lot of my stuff. And if I ever need anything, I can call and get pretty much the same people. But I don't take advantage of that. So the key point is that I don't know that Robinhood identifies other than gold card members, and you don't get special privileges. And while that's not for everybody, I just wonder if Shai just never saw the benefits of a JP Morgan, of a Morgan Stanley, of a Fidelity, things like that. Like, for instance, and I will tell you this, the CEO of Trendspider, I think Trendspider banks with JP Morgan. They gave him an allocation to SpaceX. I mean, Fidelity comes to me and says, hey, would you like an allocation to this pre-IPO? And I think they do that for most clients. Like, you can sign up for Fidelity's pre-IPO stuff, but there's a higher level where they just kind of talk to you about it. And I think that's where Robinhood probably is going. But until they get there, I just, for me, the hand holding, and again, it's personal. It's kind of like, which underwear do you like? Where are you taking your mistress to? A Coldplay concert or a dark jazz room where nobody's at? Some people go to Coldplay concerts. Some people make bad decisions. So, yeah, I mean, Robinhood is one that if I got into it, if I ever get into it, and I probably, it's one that I absolutely, I mean, full disclosure, Robinhood is probably getting into the core portfolio. I mean, that's how much I like this one. But I don't own it yet, so it's kind of like, I haven't traded it. I haven't owned it. I may have traded it a couple of times, but okay. Team bonding moment. Yeah, the short stuff. See, that's the stuff that I don't do, Chris, because I do this podcast. Literally, by the time I'm off this, and it's why, you and I have chatted about on Reddit about options, and it's why I'm just fried after this. So let me look at my Fidelity account. Yeah, I'm up 0.13. It's a good amount of money, but okay, I'm out. Have a good weekend. The paid members may get a paid thing this weekend. I was thinking about it. Still got a couple in the hopper for you. Okay, take care. See you guys.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.